Morning, I'm Daryl Jones, Director of Research at Hedgeye. Welcome to the macro show for June 9th, 2021. Inflationary data from China to kick off the morning.
What's China have to do with it?
China.
Can you imagine if China actually exported some of that producer price inflation when the 50-day moving monkey's under assault in the U.S. 10-year?
Yeah, it's pretty, the disconnect between PPI and CPI in China is interesting because, eventually it's going to catch up, right?
Yeah. Well, and
either they're going to screw the factories or it's going to get passed on to people.
And part of their CPI, consumer prices, are doused with a stronger currency, don't forget.
Yeah.
When you have a weaker currency, you have higher reported CPI because your currency, obviously, everything's local in inflation terms.
We actually looked at this, and Chinese PPI, no surprise, is one of the best predictors for U.S. CPI. So there's a really tight, a lagging but tight correlation between the two. I was looking at CPI this morning, and clearly what people are doing is anchoring on May because that was the trough, right? And then you have, if you go back to 2020, then you have a ramp into June. So everybody's like, this is the peak because it was the trough. So it's basic comp analysis. But you look at all the other data, home prices, commodity costs, to your point, supply chain constraints, jobs hard to fill at all-time highs. Like all this is creating pricing pressure, right? So,
yeah, China.
So you can look at one thing, the comps and position for that, and that's fair, and maybe there'll be a slight deceleration. And then China, to your point,
China with a COVID variant.
Yeah. Morning, I'm Daryl Jones, Director of Research at Hedgeye. Welcome to the macro show for June 10th, 2021. It's a little hot in here. We're both wearing shorts. Could it be the CPI coming in hotter than expected?
Get in the hot tub, make me sweat. What are we going to do about that?
I don't know.
Should we change our asset allocation?
Probably not.
Should we shit our pants?
Well, I think we were positioned for an acceleration in inflation, so that's good.
Hashtag inflation accelerating at Hedgeye since June of last year. Reiterated this morning. Again, you don't need the CPI to tell you that. You need to get the components right, actually. This morning's CPI, by the way, was hotter than we even had it. But again, there are parts of these numbers, don't forget, that the government makes up. So when they make them up less, they go up faster. Isn't that so good? But again, if you just get inflation right by owning it, that's a lot better. And you'll do a lot better doing that. For example, the Manheim Index, which is the proxy for used cars, we've been talking about that for months and months and months on the call. For those of you that subscribe to that, Josh Steiner reiterating again, this month's numbers up again. So again, this is a May number, and he was talking about the new numbers for the pending month. I think it was a third of the CPI gains were used cars.
I think this is right, but I think a third of the sequential gain was from used cars.